He's buying the practice and real estate for 1.3. We're selling the real estate for 1.3 based on the lease that we're signing at close of escrow on the
Oh
real
my
estate
gosh.
sale.
So he got a practice for free?
Yeah, we got the practice for free.
All dentists know the common career paths, but how do you know which path is right for you, and are there other options out there?
On this podcast, we will be chatting with industry experts. We want to bring you the knowledge and resources you need to take your career to the next level and break down those industry secrets interview by interview.
We are here to ignite a revolution in the dental landscape
And help you, the dentist, build the career you have always wanted.
I'm Dr. Cassidy Reeder,
I'm Carter Frank.
and welcome to the Revolution Dentistry Podcast.
I'm Carter Frank here with Cassidy Reeder. This is the Revolution Dentistry Podcast, where we help you with strategies to build lasting success for yourself and for your family. Today we have with us Don Bingham, a legend in the healthcare real estate sector of dentistry. Don is a seasoned professional in the healthcare real estate sector, currently serving as the president of DRB Companies, with extensive expertise in the acquisition and disposition of healthcare and net lease real estate across the nation. Don has successfully facilitated hundreds of transactions. He is dedicated to empowering healthcare professionals by educating them on the significant role real estate plays in building wealth. Through his guidance, many have learned how to leverage these valuable assets to enhance their careers and achieve generational wealth. Welcome to the podcast, Don.
Happy to be here.
Yeah, thank you, Don. All right, Don Bingham, the legend of healthcare real estate. We're so excited to have him on here today for you guys because we have really been wanting to introduce this topic of healthcare real estate to our listeners because we know how valuable that this topic is for generating and creating wealth for dentists. And, you guys have heard us talk about this in the past. Real estate is where the majority of the world's wealth is created and maintained. And so having Don come on here and educate us a little bit about the opportunity that exists for dentists to get into real estate, especially in the healthcare sector, and describe maybe a couple of strategies that can help us take advantage of the opportunity at hand. So, Don, thank you so much. Can you share with us a little bit about your background and what brought you to the healthcare real estate industry?
Yeah, happy to. So, right out of college, I went into commercial real estate brokerage. My aspiration at the time was to be a real estate investor, so figured that brokerage was a good way to raise capital and get experience that I needed. I initially focused geographically just on San Diego, and I focused on retail net lease in San Diego. So by happenstance, I got a veterinary clinic as my fourth or fifth listing, which was my first sort of foray into the healthcare
Right.
sector of commercial real estate. So from there, I guess I focused a little bit more on healthcare. I leveraged that listing to get a couple of more. And then at some point, I sort of realized that the healthcare niche within commercial real estate was, one, underserved, and two, a lot of the owners weren't quite as sophisticated and nuanced as the owners on the retail side that I had initially been focusing on.
Mhm.
So for me as a broker at the time, being 1 or 2 years into my career, it was a good opportunity for me to really, I guess, be an expert, one, because a lot of these owners were the doctors who had either sold their practice to private equity or still own their practice, but real estate wasn't their business. Their business was practicing medicine, whatever sector they were in. So I felt that that was a good opportunity for me to really educate them on the importance of real estate and, like I said, really act as an expert to them. So I expanded outside of just San Diego. I made the business decision to exclusively focus on healthcare real estate across the country. Did a ton of dental, ton of veterinary, ton of eye care, ambulatory surgery centers, urgent cares, all of that.
Wow.
And as I continued to expand, I just continued to see that same trend I saw in San Diego, where a lot of these owners were doctors who practice medicine, were not real estate investors, and oftentimes were, in my opinion, leaving a lot of opportunity and money on the table because they weren't really real estate investors. They didn't understand real estate from the viewpoint of an investor. So
Wow.
that's how I got into it, I'd say.
Thank you.
Awesome. Yeah, so, dentists really aren't taught much about healthcare real estate. Before we started the podcast, you mentioned how some dentists have actually sold their real estate, or their real estate was worth more than their actual practice, which I think is crazy. So, can you give us like a general explanation of the value that exists in healthcare real estate for dentists? Essentially, why should a dentist care about healthcare real estate?
Yeah, so a ton of reasons I think dentists should care. I mean, one, just at a very base level, even if you are not owning real estate and you're just owning a dental practice, you're signing a lease. And a lease is a long term, big commitment, oftentimes with personal collateral on the line. I mean, these are 10, 15-year leases, sometimes six-figure base rents starting. It's a big commitment. So if you're going to sign a lease like that, in my opinion, you should understand what you're signing, and understand that obligation that you're signing up for. So, at a base level, I mean, that's why you should know about real estate as a dentist.
Mm-hmm.
And then, sort of double clicking on that and going into more detail, there's so much wealth creation potential in the real estate part of this business as well. I mean, at a base level, principal pay down. When you go and buy a building, you get a loan on the building, and you're paying interest, of course, but you're also paying down that principal, something you don't get to take advantage of as a tenant paying a lease.
Right.
Your business is paying down the principal on this loan. So that's a simple form of wealth creation. And then there's a lot more fun strategies that we could get into that I'm sure we will later, like the de novo model and financing a practice acquisition through a sale-leaseback transaction on the real estate. But yeah, there's a huge opportunity for wealth creation for dentists through real estate. That'd be my answer to that.
Absolutely. Thank you. So, just like a little brief, I guess, explanation of maybe what net lease means. Not a lot of dentists maybe understand what a net lease real estate means, but a lot of healthcare, in my understanding, a lot of healthcare real estate, whenever it's being leased out by the owners, it's on a net lease, contract. And so what does net lease mean? And what is the benefit of owning healthcare real estate that is, operated on a net lease basis from an owner standpoint?
So net lease, the word net is referring to triple net. Typically, sometimes they're double net, sometimes there's absolute triple net. But triple net lease essentially means that the tenant is paying all of the expenses related to the property. So, all maintenance of the property, all insurance, all property taxes, and any other ancillary expenses, which essentially, from an ownership perspective, creates a passive income stream for an owner. So, me being in Southern California, I can buy a triple net dental office in Dayton, Ohio, and I won't have to worry about fixing the HVAC unit when it goes out because it's a triple net lease.
Right.
I don't have to worry about paying the tax bill or getting the landscaping done, any of that. So it creates, for me, a very passive investment, and it opens up the buyer pool for a property like that on a national scale because buyers don't have to worry about that.
And is
stuff.
that pretty
So,
common?
oh, extremely common. I'd say 9.5 out of 10 are triple net leases in the healthcare space.
Which makes it so valuable. Yeah, absolutely. That's awesome. Thank you.
Yeah. So do you mind walking us through, it doesn't have to be your favorite, but a very effective healthcare real estate strategy a dentist can use to create wealth?
Yeah, totally. I mean, what I would say, simply the sale leaseback is probably the most effective method. And a sale leaseback is when an owner occupier, so a dentist who owns the practice and the real estate they practice out of, sells the real estate and leases it back from the buyer of the real estate on a long-term basis. So operationally, nothing changes, but you sell the real estate, get your capital out of the real estate, which allows you to reinvest that capital elsewhere. But you maintain long-term control of the facility that you're in.
That's awesome. That's really awesome. I feel like, sale leasebacks, they are an incredible way for dentists who already own real estate or who already own the real estate to their practice to, cash in on the value of that real estate to go ahead and pursue another venture. Maybe that might be acquiring a new practice and using that real estate as a strategy to create that financing, right? To create that capital to go and purchase another practice. That's absolutely a great way to do that. So, moving, I guess, to the next component here. So, what's the value of purchasing vacant real estate that might be originally like a retail space or like an office space? Like, we've heard it many times that COVID has caused a lot of retail and office spaces to go vacant because a lot of companies have moved digitally, right? Online. And so it's opened up so many of these spaces and they've become vacant. And so what's the value in purchasing these empty vacant spaces and converting it, right, to a healthcare real estate space? Like, how does that affect the value of that specific real estate? And how much more value is there in healthcare real estate compared to just like maybe some retail or office space?
Yeah, totally. So it adds a ton of value, obviously. But by buying a vacant building that was retail or conventional office and converting it to medical, you're doing a few things. One, you're significantly improving the facility. To convert it to medical, it means a lot of capital needs to go into that building. So for dental, you need to plumb the building for dental. Typically, 4 to 8 operating rooms or ops is a expensive to plumb. You have to do all the demising to arrange the building to be utilized as a dental office, and then all the other improvements that come along with it. But that adds a lot of value on its own because you're significantly improving that building. In addition to that, by doing these improvements, you're increasing the price per square foot and rent that the building can command. Because if I'm a dentist and I'm looking at a vacant office building and I'm doing my underwriting and I'm saying, okay, I'm going to need to spend $300 a square foot to convert this building to a dental practice, I'm going to factor that into what I offer in terms of rent and all other lease terms. If that building is already built out to be dental and I don't have to work that part of it into my underwriting, and it might cost me $25 a square foot to build out the space,
Wow.
I'm going to be willing to pay a lot more in rent. Commercial real estate is 100% valued based on the income that is generated from that building, when we're referencing stabilized real estate at least. So if you can command more rent for your building's going to be worth more. And then lastly, I'd say the lease that you're signing. So even if you're buying the building yourself and occupying it yourself and don't plan to sell it, chances are you're going to sign a lease with yourself for tax reasons. And that lease is what creates that income stream for the building. So that's what allows you to benefit from the added value. So if the building's market rent was $12 per square foot and it's regular state as a conventional office building, you come in, you build it out to be a turnkey dental space, maybe the rent's worth $22 a foot at that point.
Right.
Execute a lease with yourself at $22 a foot, and whether you hold it or sell it, you've improved that building value significantly. And all of that equity goes right to you as the owner.
That's incredible. I really like what you said about possibly looking for a space that wouldn't take all that much money to turn into a dental practice, like a vacant space that might have been like a med spa, right? Or might have already been some sort of medical space that has the build out for a dental practice, so that you wouldn't need to do all that much in order to convert it to that, right? And it would make it so, like you said, the cost of renovation or the cost of conversion would be so much less. So I know a lot of people who focus on that strategy, which is great. But all of these strategies converting, vacant space into a healthy turnkey, dental practice, it requires having a solid, startup or de novo model, right? So I guess saying all of these things is one thing, but actually being able to do it is a whole other thing, right? having that solid de novo model in your pocket to be able to do such a thing. So we have to keep those things in mind. But yeah, I just wanted to mention that. Thank you.
Yeah, totally. And I mean, I'd say another way to look at it, and something that is a huge part of my business that doesn't necessarily involve a de novo model,
Uh-huh.
is acquiring a practice that has real estate
Right.
and then leveraging that new lease to add value. So I have an example deal I'm working on in Michigan right now with a dentist client of mine.
Mm-hmm.
He's buying a practice with the real estate. Total purchase price is 1.3 million for the practice and real estate.
Okay.
And he's currently under contract to purchase the business and real estate, and we already have an LOI signed with a buyer for the real estate for 1.3.
There you
So
go.
he's buying the practice and real estate for 1.3. We're selling the real estate for 1.3 based on the lease that we're signing at close of escrow on
Oh
the real
my
estate
gosh.
sale.
So he got a
So in
practice
that
for free?
case, yeah, he got the practice for free. He doesn't have to worry about the de novo model because there's already an existing practice there that has over $1 million in collections. So it's another way that you can do it where you might not have to utilize the de novo model.
That's incredible.
That
We'll get
is
more into
crazy.
that. Thank you.
Yeah.
Yeah. So one thing I was always confused on when I was a child was a real estate investment trust and how to utilize a real estate investment trust. I've heard of doctors conglomerating their real estate together and then selling it for a bigger price. It's almost like when a doctor combines practices for a higher multiple. It's sort of like that. So what can you say about how a dentist can utilize a healthcare real estate trust in the healthcare real estate industry?
Yeah. So a couple of ways. I mean, a real estate investment trust, a REIT, is a large company that pools investor capital to buy real estate. So essentially, you can think of them as an end buyer. So obviously, you can go invest your money in a REIT. That's separate. But what you're referencing is pooling properties together in portfolio and selling them to a REIT. And I would say the biggest benefit of doing something like that, rather than the conventional EBITDA multiple expansion you get from combining practices together, I'd say it more so exposes you to those bigger buyers. Because if you are a single practice owner and you've got one practice in Des Moines, Iowa, chances are Realty Income, a big REIT, isn't going to buy your practice because it's not a big enough deal for them.
Mm-hmm.
A $1 million deal isn't enough to catch their attention or demand the use of their resources. However, if you band together with, say, 20 doctors, and now it's a $30 million portfolio, you get access to those buyers because now it makes sense for them to allocate their resources to acquire something like that. So I'd say that's one way. But another way I'd say is setting up more of a programmatic relationship with a REIT. And this can work with a REIT, it can work with a family office, it can work with a high net worth individual, really any end buyer of real estate. And what I mean by a programmatic relationship is sort of a partner who wants to purchase the real estate as you buy the practices. So for the Michigan example I mentioned earlier, the $1.3 million building, that particular dentist has a programmatic partner on the real estate side who is buying several buildings from him, not just this Michigan building.
Okay.
So by leveraging the relationship he has with this programmatic partner, who's a large family office, they're not a publicly traded REIT, but they're in the same bucket, I'd say.
Right.
They're able to scale their strategy because they know that they have an end buyer for the real estate. They know if they go find a building and a practice for sale in Akron, Ohio, that they have a buyer for that real estate and they can underwrite that into their strategy
Mm-hmm.
and scale accordingly. So that's another way that you
Wow.
can leverage these big buyers in the
Wow.
marketplace.
That's awesome. That's incredible. And you know, in my opinion, you are sharing the secrets to real estate wealth. Like, and I know it's taboo to say secret, but in reality, it's what it feels like sometimes because this kind of stuff isn't taught. It wasn't taught to me in school. Especially as a dentist, I mean, you have to go out and you have to seek this knowledge. You have to go out, you have to meet people and form relationships and network with the individuals who understand these components such as yourself, like, and you've been so great in wanting to educate dentists on the value of all of these secrets and try and bring this to light so that people like us can understand the opportunity that exists. So, um, you know, kind of along the same topic, it takes money to purchase real estate, obviously.
Hmm.
But, do you know of any strategies a dentist can use to purchase real estate without having to go into much debt, especially for their first deal? So, like, I know that, you covered the topic of a dentist purchasing the practice in real estate for 1.3 and then selling it to the buyer, um, selling that real estate to the buyer for 1.3,
Hmm.
right? So that's one component. Um, but can you think of any other ways that someone can purchase real estate without having to go into much debt, and especially maybe for their first deal? Yeah.
Hmm. Yeah, I'd say the first one that comes to mind is seller financing, which I'm sure a lot of your listeners are well familiar with. But I think for a dentist who maybe doesn't have a lot of capital built up and is trying to break into this whole strategy, I'd say that's probably the best way to do it, aside from finding a good opportunity like the Michigan deal. But by, I guess, connecting with the seller and I guess building rapport with them, explaining to them what your strategy is, and making an attractive offer that entails seller financing. It would give you an opportunity to get into a transaction without using a conventional lender. Technically, you're still in debt, but you're in debt to the seller at typically better terms and typically no personal collateral. Typically, worst case, you hand the keys of the practice back over to the seller.
Hmm.
There are some other creative strategies that you can do with a self-directed IRA and a 401k
Okay.
that me as a broker I'm not totally familiar with. I have clients that have utilized these strategies, but I would say speak with a good accountant, a good tax accountant, and they can assist you with that sort of thing. But
Okay.
there are good ways to do it that way. In my opinion, though, the best way, hands down, is to find a good opportunity like the Michigan deal. I think that's where it all comes from, finding a good opportunity, because if that, let's say the Michigan, I'll use another deal I'm working on right
Yeah.
now in Akron, Ohio, actually. So there, actually, you know what? I'm going to use a deal we're working on in Indiana because it's a better example, I think, for
Okay.
this. So in Indiana, we've got a building under contract right now for $410,000, and that's under contract for us to purchase from the seller.
Hmm.
It's a vacant retail building right now.
Hmm.
We already have a purchase agreement signed with the buyer for that same building for $2 million even.
Hmm.
So the profit generated on the transaction is 1.6
Oh
million or
my
so,
gosh.
and that's before fees and all that. And a large portion of that is going to go into improving that building and converting it to a brand new dental office, which is expensive.
Yeah.
But there's going to be a lot of profit there as well. That profit in this case is going to go towards helping with marketing costs and staffing and actually setting up the business because this is a true de novo.
Oh, okay.
Um, but the point is, there are opportunities like that out there, and you don't need to go into any debt aside from maybe a 6 month bridge debt term or even less if you're able to get transactional financing, and then you can have a free practice and a good chunk of profit, say 300 or 400 thousand, to go do it again.
Oh my gosh. That
So
that's
yeah.
incredible. Sorry, continue. Sorry, I'm just blown away.
Yeah, really, I think the biggest takeaway is that it all comes down to the opportunity you find, which anyone is able to find. You can find it, I can find it. All it takes is getting out there, hitting the pavement, making cold calls, and finding the opportunity. If you can find that opportunity, the money part figures itself out. And I
Right.
think a lot of people kind of stop themselves from even searching for the opportunity because they know they have no money and they think there's no way to do it. But it all comes from finding that opportunity. I mean, if you find that opportunity and you call Cassidy. I'm sure you can get that deal done. So
That's right.
it all comes down to the opportunity.
Exactly. No, I really, really appreciate you sharing so many of these awesome strategies, um, and the value that real estate has in making all of these opportunities possible. I feel like, there's a couple other strategies that we can, dive into here in a bit that I'm curious about. But yeah, no, thank you so much for diving into that. And but yeah, Carter, take it away.
Yeah, so again, for the viewers that don't know, we had some technical difficulties before this, so we've kept Don for much longer than we should have, but he's very generous about it. But so one of the strategies I'd like to talk about, it's when dentists band together, right, and they raise capital to purchase a big complex, such as like a 10,000 to maybe even 50,000 square foot complex, and then they usually has high vacancy rates. And yeah, so have you ever seen one of those types of deals play out, and what are the pros and cons to it? And it's usually probably lucrative if done right because it's such a big building. So what do you have to say about that?
Yeah, totally. So I would say a super important piece of that is making sure you have someone on your team that's truly a professional and really understands the investment side of commercial real estate. Because when you get to a project of that size, it's complicated. There's a lot of money on the line. There's a lot of debt on the line, and there's a lot of opportunity for loss. So you of course have to be careful and have to make sure your team is comprised of people that are capable of doing it and capable of properly evaluating the risk and all of that.
Mm-hmm.
But that said, there is a ton of opportunity there as well. I mean, if you buy a 50,000 square foot vacant office building in Dallas, Texas, we'll say, and let's say it's 80% vacant, so
Okay.
20% occupied, and you come in, you say, hey, okay, we can start a GP with an implant practice here. We could, let's say, take up 10,000 square feet of this building. Now we have 30,000 square feet that we still need to fill. You can go in and partner with other doctors that are in your network, partner with a healthcare specific leasing company to help identify tenants who can occupy the other 30,000 square feet.
Mm-hmm.
Let's say you do it, you sign absolute triple net leases for all the units, which in this market I do think is feasible. Probably triple net rather than absolute triple net,
Okay.
since it's a large multi-tenant building. But you've gone from buying a mostly vacant office building that you're probably buying at an attractive cap rate or no cap rate at all because there's hardly any income and you're buying on a price per square foot basis,
Right.
to then having a 100% occupied medical building that you're selling on a cap rate. If it's in a market like Dallas, it's probably a pretty aggressive cap rate.
Right.
So without having the numbers in front of us, we can't really walk through the dollar amount that you've added value, but it's a lot.
Right.
And you can add a ton of value doing this, and the profit that you make in doing something like this is more than enough to, one, build out your practice, that 8,000 square foot practice that we mentioned. So you get a free practice out of that,
Yeah.
and you get a healthy amount of profit to go and do the next deal.
Wow. I mean, some of these strategies are just mind blowing, and I know that there's people out there doing it, but it's, something that a lot of dentists aren't familiar with. So, we mentioned that this kind of strategy we've seen for for complexes that are between 10 and 50,000 square feet in size, and the reason why we think that there's more opportunity in this 10 to 50,000 square foot size compared to smaller than 10,000 square feet is because the real estate for, offices or complexes that are smaller than 10,000 square feet are occupied often, and are sought after often by, other dentists or medical specialists or vets or veterinarians or chiropractors, you know what I'm saying? So there's a bit more competition in that smaller space. And then the very large space, like over 50,000, you're looking at like enterprise level, competition for those spaces. And it's really difficult to fill that kind of 50,000 plus space with medical and healthcare tenants. So kind of focusing on this 10 to 50,000 square foot space and it having like a high vacancy rate, but maybe not completely vacant. And then you banding together with other dentists in your network and working with specialists who are able to help you find tenants to fill this space. But also, if you are interested in creating a dental practice in this space yourself, then the profits that you would get from turning this mostly vacant complex into a fully, leased out healthcare space is staggering. And that profit would be more than enough to build whatever practice that you would need in that space, or use that profit to go and do this again somewhere else, right? And so, and that's kind of where that whole concept of creating kind of some capital to get involved in these opportunities, because a lot of dentists, they don't have the type of capital to go and buy these large complexes right away. And so maybe that concept of taking your 401k money and converting that in a tax-free exchange to a self-directed IRA to be able to then use that 401k capital in whatever kind of investment that you would want, right? Because 401ks, you have to use that money and invest that money in a very specific way. It limits how that money is able to be used. But a self-directed IRA, you can use that money to invest in however you like, relatively speaking. And what I mean by however you like is in real estate opportunities like this. Obviously, you want to consult your accountant before making any decisions, but the opportunity is there. And I think that is really, really fascinating. But do you have any thing else to add to any of that, Don?
Yeah, I mean, I'd say so for that strategy, I mean, you're really doing what real estate investors are doing across the country. I mean, that's a huge part of real estate investing, just buying a value add building, adding the value, and selling the building. What you're doing is really just adding your business into that building as part of the value add, and doing so for free. I would say, I mean, just to sum it all up, if I were a dentist today and a few years out of school, I want to go into more entrepreneurship and I want to own a practice, what I would do, step one, is I would go find that Michigan deal. Find a deal like that, because they're out there. I see 3 or 4 a week. So I know they're out there. It just takes finding them. And you can get into that dentist, I can't express enough. He's $0 out of pocket. He's going to be the owner of that practice in about a month for free. And there is nothing stopping anyone from doing that. It's just finding the opportunity.
Gosh.
So that's what I would say. I think to zoom out a little bit as well, and to give a little reference as to why everyone's not doing this, because it seems like a no-brainer. It seems like everyone should be doing this.
Right.
I think that the healthcare real estate space in general is very early on. And what I'm referencing is 25 years ago, this is where retail real estate was. So when you think retail, think a Wendy's franchise, a McDonald's franchise, urgent care, because in a way that's retail as well, or a single tenant grocery store, all of retail. Owner users have been leveraging sale-leasebacks and all of these strategies we're referencing in retail for the last 25 years. It's not new. It's gotten to the point where it's difficult to pull this off anymore in retail, because everyone in this space understands this strategy. They know that you can't go buy a vacant building and sell it for 3 times as much as you bought it for in retail, because the sellers understand the worth of their building. In healthcare real estate, since we're so early on, there's still that opportunity. I think in even 10 years from now, there won't be nearly as much of this opportunity out there, because I think a lot of people are going to catch on for reasons like this podcast. I mean, people are starting to catch on already, and they have in retail, and it can't do it anymore in retail. So I'd say act quickly, because it's not gonna be like this forever.
That's incredible. Wow.
That is incredible. So just for our audience listening, maybe they have some questions about healthcare real estate. And I know we are giving away the secrets here, but it's good for the audience. At least they're the first to it, what would be a good contact for them to, if they ever wanted to email or reach out to you, to ask some questions about healthcare real estate, what would be a good place to find you at?
Yeah, so my website is drbcompanies.com. My email is don@drbcompanies.com. So shoot me an email, give me a call. My cell phone's on the website. Reach out anytime.
Thank
Awesome.
you.
Perfect.
Thank you. We're so excited, Don, to, be sharing this information with people. We are seriously so stoked about it. You guys, thank you for tuning in to the Revolution Dentistry podcast. If you're finding value here, make sure to hit subscribe so you never miss an episode. We're here every week to help you grow. We'll see you next time. Thank you.